Let's continue with the next core concept, being the move to the high and the move to the low. And even though you haven't heard these two terms before, you have somewhat seen them, because a move to the high or a move to the low actually plays a very crucial role within the structure of a reversal. So let's first address the definition of these terms, and let's start with the move to the low, because this one is a little bit, you've seen this one before. A move to the low is pretty much equivalent to a swing high, and the swing high is the second stage, the second key point within the structure of a reversal. A swing high is a local high or a local peak where price eventually falls and bottoms. So if you have a move to the low, you also have a move to the high, and that's vice versa. A move to the high is equivalent to a swing low, and this is a local bottom where price eventually rises and peaks. Okay, so the reason that this concept is very important is as follows. So again, let's just assume, again, I didn't count them to the T, but all the candlesticks within a circle, let's just say there are 200 candlesticks, take it with a grain of salt. Even though all the candlesticks are important, because each candlestick represents a page within a chapter, within a book, we do need to make a differentiation between the relevant and the important price action. Out of the 200 candlesticks that are in the orange circle, let's say at most 10 to 20% actually matters. As soon as you can make a differentiation between the noisy, the manipulative price action and the relevant, the very important price action, that's how you can create better decisions or can create educated guesses, and obviously that should also lead to better trading setups. Okay, so in this case, let's just start with the move to the low. Again, let's just focus on the 4-hour time frame on Ethereum, and I do think it's quite clearly visible. So for example, if we are going to start from this point to this point, okay, so this is point A and this is point B, we can clearly identify that price is currently in a downtrend. So this is actually, if I just make use of the replay tool as well to make it a little bit better, this is where price created a local peak, as you can see, but eventually you fall down, price falls down, and it bottoms out locally, okay, as you can see here. Because from this point to this point, we bottomed, okay, or we fell down, but then eventually we found some form of support, and then we got to this point, okay? It rose a little bit, and then again, we went to lower prices. So as long as price is unable to get above the so-called move to the low, we can consider the trend to remain intact. Okay, so from this point onwards, we break through levels, but as long as we don't get above this particular level, we can expect price to go lower until we create new lower lows. As you can see, a local high or a peak where price eventually falls and bottoms. So eventually we create a so-called resistance zone where price creates newer lower lows, and this will become the very important resistance level, the resistance zone, or the so-called level to gain, where price needs to close above in order to potentially bottom out here. But as you can see, the price or the market was unable to do so at this stage or this phase of the market, and then eventually you just go lower, lower, and lower until you at some point gain levels. So this is a new so-called move to the low. We create a local peak, but we go down. We create a new peak, but we go down. And then eventually, of course, you get above a specific level or the so-called move to the low, and that's when you potentially bottom out. Okay, you also need to understand whenever we are talking about move to the lows, we also have move to the highs, of course. So in this case, and this might be very clearly visible on the 1 hour, this level, let me also apply the replay tool. This particular level is a very clear example of a so-called move to the high. Why? You can clearly see that a local bottom is being created. So within this circle, we see that price creates a local bottom, okay? And then eventually price surges. It eventually rises and peaks out. So this point, from this point to this point, is what we can consider to be a move to the high, because from a local bottom, we create a new high, okay? So as long as we hold the move to the high as support, then we can pretty much make the assumption that price keeps the local uptrend intact. I will just repeat myself once to make you understand what I just said. So whenever a move to the high has been created, okay, where we can clearly and very visibly see a local surge of the price, a pump, you know, a good price increase. As long as you hold the move to the high as support, then we can expect price to go up. So move to the high, we don't lose this, so we hold it, and there are no rules as in you need to touch the level or whatever. That's not necessarily needed, okay? And that's not something that I will say as well. It doesn't matter. Of course, price could potentially hit or touch the level, so to say, and still go up. But whenever you see something like this and it doesn't even touch the level, that's only bullish, that's good. That tells us the price is going up. So whenever price is creating new levels, as you can see, a new move to the high, you're going up, more up, more up. But then, as you can see, at a certain point, this level, okay, and let's just focus on the price action in chronological order. So don't necessarily focus yet on this, focus on this part, okay? From this moment, from this point onwards, you can see a clear move to the high being created, because we can see price surging to new higher highs. But then, unfortunately, at some point, you can see that price loses this particular level, and then the level to hold or the move to the high or whatever you may call it eventually gets flipped to resistance, and that's where we get to a downtrend. Okay, so we were initially in an uptrend, then eventually we go in a downtrend, and this is pretty much rinse and repeat. So when we break the move to the high, we go to a downtrend, or normally that could potentially indicate the price wants to go lower. That's not always the case, of course, but usually that happens. So then we have the move to the low. Do we gain this? No. As long as we don't, and then we are obviously going from an uptrend to a downtrend, as long as price is unable to get above the so-called move to the low, or the swing high, or the level to gain in this case, you can expect price to keep on falling and go to lower prices. So eventually we create newer lows or a new move to the low. What happens? We go down. As you can see, we create a new move to the low. We create a new move to the low, because from this point we created a newer low, okay? So then we keep on going to lower prices. And what do we need to do in order to potentially bottom out? We need to get above the so-called swing high or the move to the low. This is the move to the low. Move to the low. Why? Because you can clearly see, visibly see, that from this point onwards, we created newer lows in comparison to this point. So this can potentially function as a previous low. And as long as price doesn't get above this particular level, in this case 1931, we can expect price to go down. But whenever we get above 1931, then suddenly price can go higher. And that's exactly what you see. There we go. And right now we are actually at a stage, and this is more applicable to the current price action. This is actually real-time price action. As you can see, this is a very clear move to the high, because you can see that we go from a local bottom to a new local peak. Okay, from this local bottom, price eventually rises and peaks out. But then again, it doesn't really matter what price is doing locally speaking, so to say. Okay, it's not necessarily bearish, for example, or bad for the market to have a pullback, a retrace. But we do know that as long as we keep this move to the high or level to hold as support, we can pretty much expect price to keep on going more up. So what happens? As you can see, this was the move to the high. We touched the level to the T in this case, and again, you know, it doesn't really matter, but this allows price to keep on moving. And when you get a better feeling, a better grasp of how the move to the high and the move to the low works, that's how you can identify potential trading setups, market change, or changes in market directions, and that's how we can anticipate and take a lot of good trades, to be very honest. So move to the high and move to the low.